For the second year in a row, one Portland company salvaged what was otherwise a mediocre year for Oregon venture capital investment. It's Vacasa, which provides vacation rental management services to property owners in Oregon and around the country. The company raised $103.5 million in October, nearly one-third of the entire $348 million invested in Oregon startups last year. That's according to new data out Monday night from the National Venture Capital Association and the industry analysis firm PitchBook. Their data found that venture capitalists invested $84 billion in young American companies in 2017, the most since the dot-com era. A huge share of that money, $34 billion, went to San Francisco and Silicon Valley, which remain the nation's primary hub for venture activity. Venture capitalists invested $1.7 billion in the Seattle area, a comparable amount to recent years. Oregon's haul was up 15% from 2016 and the most in several years. However, venture capital numbers are to some degree subjective, with a great deal of interpretation as to what qualifies as startup investment. Vacasa's latest funding, for example, was led by a firm called Riverwood Capital, which describes itself as a private equity firm, not a venture capitalist. Private equity firms tend to invest in more established companies like Vacasa, rather than brand new startups, though Riverwood focuses on companies with high growth potential the way traditional venture capitalists do. If one does consider Vacasa's funding private equity, rather than venture capital, then Oregon was at a 5-year low in 2017 for venture investment despite the state's robust economy and hardy sector nationally. And while Vacasa's growth is real, it raised another $40 million in 2016 and employs 320 in Portland. The company is 8 years old. There are few genuine Oregon startups pursuing growth on that scale. That's a stark contrast to the years immediately following the Great Recession, when venture capitalists backed several Oregon businesses, including Elemental Technologies, Urban Airship, Act-On Software, and Puppet. But a second wave of startups never materialized after those early fundraising successes. Honestly, I wish there was more going on right now. It feels like it's been quiet over the past few years, said Kate Johnson, the new chief executive of Portland-based Act-On. I think it's gotten a little stale, unfortunately. There could be several reasons for the slowdown. With the exception of Elemental, which sold to Amazon for $296 million in 2016, the generation of Oregon startups that emerged a decade ago have yet to produce big paydays for investors. That may have deterred Silicon Valley venture capitalists from focusing their sights on Oregon. And it may be that the strong economy has actually deterred startups, because Portland technologists can find lucrative jobs at many companies including Amazon, New Relic, Viewpoint Construction Software, and many others. That could make it less attractive for skilled professionals to start their own businesses. Still, there were other Oregon businesses that raised notable investments during 2017.